So, thanks so much, Erwin. I hope you hear me now. I've been blabbing for the last 4 minutes and nobody heard a thing. I wonder if there's a way to edit that. I assume you can hear me fine just now. Well, I'll I'll make that assumption, but I forgot to turn on the microphone. As dumb as that is, I was rambling about what I hate about tesly, TSLY, and the yield max funds. And I'll start over and going into it. And if you guys, please, by all means, if you have questions or you have stocks you're looking at that you want me to do an analysis on, it's kind of nice instead of being outside where I do my videos to be here by the computer because I can pull things up. I can see the charts, which is what I look at for the most part. I can even see the earnings and things like that and get a little bit on the companies if I'm not familiar with them. Anyway, good morning. As usual, this is not financial advice. Please use any of this as just entertainment purposes only. Good morning, Chop Master. I hope you're doing well. Remind me again if I've asked before, Chop. What's your name so I can refer to you properly? Um, but this is not financial advice. Please just look at it as entertainment purposes only. Do your own research when making financial decisions. Don't listen to me. And I don't, you guys know, I don't mean that sarcastically. I'm just a guy on YouTube sharing what's worked for me. I am not licensed. This is just entertainment. And I hope you all do your own research when making your decisions for your financial choices. So, why do I hate Tesla? And the main reason is I feel like they're selling it. Hey, Ryan, thank you. To retirees who are reliant on the income. And they don't really understand the type of risk they're taking. And I'll repeat again, guys, if you have a question about any stock or anything, just say it anytime. If I feel like I'm in the middle of something, I kind of ramble just because these groups are really small for now. And until the lives grow bigger, there aren't a lot of questions. So I figure I'll talk about the stuff that's on my mind anyway. But I feel like they sell them to retirees who don't understand the risk and they don't even really own the underlying stock. And what I'm looking at when I'm looking at Tesla here on my screen, the stock had a year high of $25 and it's trading 14. So you've lost a lot of your equity. I don't know how much they've paid out over the year in terms of dividends. So you've probably made that back and then some, which means you've done okay. And potentially you've even done well if their payouts like last month it's claiming they paid a dollar to 22 per share. If they've averaged a dollar a month, you've gotten $12 back. It's trading at 14. You've lost 13 or 14 on the stock, so hasn't done miserable. But if you like Tesla and that's why you're investing in it, well, you've missed out on all the upside that Tesla's had in the meantime. What the company does instead of buying the stock is they buy a call and they sell a put at the money. And from what I understand, usually weekly options, and then they'll sell a covered call against the call they bought. That does mean that you're going to have the fluctuation of Tesla. So Tesla closed somewhere around 340 or 350 a share. Let's assume it's 340. What this company is doing is they're buying a 340 call and selling a 340 put. That means no matter which direction the stock goes, they're synthetically long it. I'll explain that a little bit. So if the stock goes higher by buying the call, they're long Tesla. If the stock goes lower by selling the put, they're committing to buy 100 shares of Tesla, so they're long the stock either way. They then sell a covered call against the call they're long. So same example, let's say it closed at 340, maybe they say it sell a 360 call to generate the revenue. Now they leave it in their description that if the stock falls, they can cover that call and sell a lower one to generate more income. The reason I don't like that is it caps their upside. If the stock really rallies, which it did after Trump got elected, they're only going to make on the stock side of the trade the difference between the call they bought at the money and the one that they're selling that's covered. On the flip side, if the stock falls dramatically, they're not covered on the downside on the put that they sold. So if Tesla falls a good bit, they're just going to lose that equity and they have no way of really making it back, but other than the call that they've sold against the call they bought. I know that was a lot of words, but I think it was understandable. So I think you guys kind of get the theory on it. Now, I hate that strategy, and I hate selling it to retirees mainly because of the risk they're taking on. The main reason to buy the call and sell the put instead of buying the stock is $340 a share. Every 100 shares they'd have to buy is $34,000. If they buy the call, they're only going to have to put out, let me look at where options are and see what a weekly call. Let me go to Tesla real quick, and just so we can look at it exactly more of what they're looking at. So let's go Tesla. So close at 345. We'll look at the options chain. We'll see if they have a 345. They do. So the 345 call looks like it's like 940 bid at 960 offer. So if they're buying that call, let's call it 950 that they're able to split it in the middle. The put was a little bit cheaper at 895 at 915. So if they're able to sell the put for 905, they've spent 950, they've brought in 905, they've only spent 50 cents. Now, any company that they've worked an agreement with is going to recognize the risk that they have on and require some sort of margin balance on that. But maybe they only require 25%. So instead of only being able to buy 100 shares, they could probably buy up to 400. I don't know that that's the percentage or the agreement they worked with whomever they're clearing through, but 25% is pretty reasonable. So it's not terrible. Like, it's not a bad guess, to be honest. Uh, Greetings from Zagreb. How cool. From Croatia. We went there this summer. Croatia was beautiful. Um, so let me write down Ryan and Ryan. So maybe they're able to buy it 4 to 1. That doesn't mean they're necessarily buying it 4 to 1, but they might be putting on 2 to 1. They might be putting on 3 to 1, and then they're probably putting the cash in some sort of high yield trading account in order to make back some of the money, and as well as to probably add on to the dividend that they're paying. But as you can probably already see, it's a significant amount of risk. And then the risk on selling the calls against it, let's say they're selling the three, I don't know, let me extend this because it's only giving me a few strike prices. Let's go a little bit longer to this. If they're selling the 360 call, they're collecting $4.20 in terms of premium that they can give out as a dividend. That's where they're able to pay people on a monthly basis, is by selling these weekly options. Again, if it goes up, you're only going to make about $15 a share, which I know that's a ton, but which would be great. That's good return for a week. But when you have a company that shot up like Tesla did, you miss that actual move of the stock, and you still have the downside risk. So when the reverse happens, which it will from time to time, no stock never has a pullback and never has down moves. And that's where the company's really going to get crushed on it, because they're still long and they're not really doing anything to cover that. And I hate the sales pitch because I really do think it's being sold to retirees relying on these high yields, or people who get super attracted to it. And I, I don't think they really understand how much risk they're taking on. If there's a real stock market correction at some point, which happens, I'm not predicting one. I really, like, I think you guys know I'm actually pretty bullish the market. But whenever one really does come around, they're just going to be stuck long in these most volatile stocks and probably get clobbered. And if it's somebody who's retired and relying on some sort of income, I just think that sucks. And I don't think I think it's a really poor product because of that reason. I don't think it's necessarily a poor product, but I think the people who get into it should really have to be educated on it and understand what type of fund they're buying. And I don't think they do. It's even like, I look at the CLM. Let me look up the name of that again, which pays a great dividend. But I'll explain that one as well, because what I don't like about it. Oh, Cornerstone. So Cornerstone is showing that they pay, let's see, a 16% yield. What Cornerstone does is they buy stocks, They have a great list of companies. I've looked up the ones they have. There's some of the ones that I really like as well as others. But what they're helping is the stocks do well enough to be able to pay the dividend. It's not like they really are generating income in order to pay that dividend. They own things like Meta and Amazon and Google, and they just hope that they outperform the market so that they can pay a 16% return, which has worked great the past year or two. But same type of thing, anytime the market stagnates or anything else, they're really not like the companies aren't just gonna automatically go up in value in order to be able to pay that dividend. So, I don't love that they sell it as a dividend or what their I don't even know the word I'm looking for, but their sales pitch. I just think you'd be better served to look at the companies that they buy and potentially buy them for yourself if you want to own them, and then you can choose if you want to give yourself a dividend or not. Uh, so Ryan, who comes up as Chop Master, kind of says the same thing. I think these yield max income ETFs are just a scam. The Sorry, my eyesight's so bad. To fill the pockets of the managers, they totally charge big fees. And again, I don't have a problem with risk. I take risk. I do some things, which is why I make my comment all the time that I don't really think people should necessarily do. But it's a calculated risk, and it's always something that I can afford to do. So I'm not super concerned when I take those risks. But if you're getting to retirement, which is what I'm guessing a lot of the people who are looking at these funds, although when I see people do the videos, they're usually young, and I also think that they don't really understand what the funds are. They just see the dividend, they know they've been getting paid, and they think, oh, this thing's the greatest thing in the world. I don't like taking advantage of retirees. And that's what I think some of these funds do. Because the general progression in my mind and how I try to set things up is the younger you are is when you take on risk. As you get older, you hope you've made enough money that you can transition into dividend paying stocks that can pay your bills. And if you're short what you actually need to be, and you see these ones with high dividends, they look super attractive because you don't necessarily understand the risk. And what you recognize is, geez, I don't really have enough money to put in the account to make what I need to be able to pay my bills. So if I just get these ones that pay the higher dividend, oh, that gets me where I want to be. But you really probably don't understand what these funds are if that's the mindset and how you're looking at things. Y- And to not educate the clients or people to understand what they're buying is just a time bomb looking to happen at some point. And I hate to be so negative, but that's what they are. They'll work fine until they don't. And I know that sounds so stupid, but when they don't, the people who got in them are going to have no clue what they really own. Um, so far, we know your forever stocks, as well as this is from Rudolph, as well as those few for 2025 in your trading account. Do you have any? Like, sorry, my eyesight's the worst, and it's on the phone. Do you have any something stocks to put a little money in to, or do you avoid these at all costs? Do I have any? Oh, 10x stocks. No, that's kind of my point. I don't avoid them at all costs. I feel like Loan Depot could be one of those. I feel like the ones that if you watch the one with the account where I have a whole bunch of things, the ones towards the end that are a smaller percentage of the portfolio, some of those I really think could. Um, Unfortunately, some of the ones I really liked that I thought could, I thought Zillow could, and they've already made a move. I think Peloton as well, which are kind of I bought too high, and as it fell, I kept believing in like one day it really could be what I thought it would be during the pandemic. Um, and yeah, there are definitely some I see that could be even like a Palantir, which I won't go near personally. I don't want to buy Palantir because I don't understand it well enough, and it's moved so far. And I find the volatile stocks, unless I was fortunate to get in them when they were super cheap, I don't trade them well. Like the ups and downs, I'm too emotional. Despite that, my personality is like the reality is on the inside. I'm too emotional for those ones who move a ton. So in terms of 10x, the what's easier for me is something like Bitcoin, which I know a lot of people hate, or cryptocurrencies. Again, I don't really get into the meme ones because I don't know enough about all of them to make that kind of bet. But when I listen to the crypto zealots, I did a video on this and I got a pushback from one of the comments, and I don't necessarily disagree. Like their comment is it's a Ponzi scam. But when I look at the people who really believe in it, and for one, a lot of them seem to be really intelligent people. This isn't people who I don't respect their thought process or things like that. And I find sometimes just following the herd of intelligent people really works out well. And my other thought with the crypto world is if you put a small enough bet in it that you're not super concerned with it. And one of the pushbacks was, well, that could justify doing that in everything. And I don't feel that way about everything. I do feel like we're early enough in the realm of digital life and in the realm of crypto that it could really shock people. And I think that those guys have a good understanding of what goes on, even though when they talk, it's way above my head and I don't understand a lot of what they're talking about. I could envision a world where we use digital currency and that Bitcoin is an actual store of value and much more valuable than how we value gold and things of that. It's not that I necessarily think it will happen, but I see the potential, and I see it because of many factors. One is as more and more people start using it, it legitimizes on its own. What's tough for me is how do you really value it? The way to value it is whatever you and I agree the value of it is at this moment. There are no earnings or anything else. It's just based on how many users there are. But if the Trump administration really puts Bitcoin as part of our national reserves, and if they do the second part of trying to buy a million coins, which there's only going to be, almost 22 million in reality, call it 21, but there have been a bunch lost, and we're not going to have that until 2140. So let's say we have 18 million. I'm sure one of you guys know how many are out there, and I could probably even Google it. But whatever the total number of coins out there, the US government's trying to pick up about 5% of those. Well, that's enough for them to be able to dictate the market movements. If they own a large enough stake of the coins out there, if they want to buy more, it could be pretty thinly traded and they could push it significantly higher. And if they want to get out of a trade, similar, depending on what their goal is in terms of trading it, they can manage the market pretty well. The interesting thing also that I think about with that is think of all the money we're spending on Fort Knox and wherever else we might have gold piled away between what they've dug out, how they buried it down there, all the staff that's keeping an eye on it, and everything else. Whereas if they get into Bitcoin instead and they sell off some of the gold and you can put it on, here, I'll show you an example. There's nothing on it. But I was playing with it as Bitcoin's been moving. Of course, I start playing with these stupid things. That's all it is. Now they have other ones and everything else. It's a thumb drive. They can put hundreds of millions or billions of dollars on a little thumb drive, and then in terms of protecting it, what if you're the U.S. government? What do they really need to do of investment of resources and people and things of that nature to protect a thumb drive? If it's put in a safe that's really hard to get to, that's about all they need, and it'll be a lot easier to pay attention to it. So Rudolph obviously agrees, but at 90, yeah, yeah, I get that, Rudolph. So what Rudolph said is, I feel you. So he understands about crypto, and if I bought some at 30,000 but at 90,000 I can't push to do it. Maybe if it drops again. I don't necessarily disagree, But the other thing that people don't recognize or think about is, which I'm sure you're aware of, is if you want to put $100 in it, you can. And the cost of moving it has gone down and down, which is why I see that it really could become more. And I'm not suggesting people do that because I kind of feel the same way. Like, I don't want to put so little in it that even if it does become what I want it to be, that it doesn't amount to much. But Michael Saylor in 20 years is talking about it hitting 13 million a coin. Now, he can throw any number out there, so I don't know that it really means much of anything. Call it $1 billion. Like, who cares what you say it is, especially when you're talking out 20 years, because who's going to remember what you said 20 years ago and date back to it, other than some idiot like me who probably won't remember in 20 years and hopes to be alive in 20 years. But anyway, rambling. I just think to the whole long answer of, are there any things that I think will 10x for sure? I do. I tend to stay away from them at this point because in reality, I'm going to put too little money in it to make it worth the return. And if I put a substantial amount in it, I'm not going to do well with it. If I put $10,000 into something that then goes up to 100,000 or 200,000, what are the odds I hold it the whole way? Because when it doubles or whatever it does, I'm probably going to get out of half to take my money out because I knew it was a big risk anyway. And odds are I'm not going to turn it into that 10x, which is why I tend to stick with the Amazons of the world. But depending on your age and what you need for you, I wouldn't avoid them. Like, I took lots of risks like that, but I was younger. At this point, it's more about protecting my family and still having some risk on the table so I can get returns. I hope that Amazon outperforms the market. I recognize it could fall in half, but I don't really picture them going out of business. Like, that's why I've gravitated away from them, but it's just my age and where I've gotten to. Not that I don't think it's worth taking bets from time to time. So Ryan's asking, what do I think of micro strategies and what they're doing? Um, it is risky, but it's also so I was thinking about this with the cryptos too, and why the industry doesn't like it is you can buy micro strategies and you can buy the ETFs of Bitcoin and everything else, and the person who's the financial advisor is still in custody of your account. They still, if it's a wrap account, which means they charge an amount per year to manage your fund, they're still going to get their, what, 1 or 2% that they charge to manage your account. If it's the other types of account, your money is still there. And don't get me wrong, I think Michael Saylor is either really lucky or really brilliant. I think it's a little bit of both. I've listened to a bit of his history. And if I remember correctly, he worked for DuPont. And when he went to quit, because he was just going to go back to, I think it was Harvard that he went to and become a teacher, they didn't want to lose him. So they offered him, I forget the numbers, but $200 million to essentially do whatever he wants with and not leave, which tells you they must have really thought he was a real value to the company. And again, don't take me on my word. I'd have to look it all up again. But it was a super interesting story that gives me a background that this guy is really bright. Now, when he put all of his money in Bitcoin and essentially took loans and sold stock and whatever he did to raise capital to be able to buy as much as possible, I think that's a huge risk just because of how volatile it is. But the more and more I learn about it and the more people who get onto that platform, the more I believe in it. Now, he's taking more risks, so you're owning more than just the Bitcoin. And what I recognize that the industry probably doesn't like about it is if you go to Coinbase or Binance or Kraken or whatever one it is that you use and buy it yourself, there's no commissions that these companies get. Yes, Coinbase gets a tiny amount or whomever you use, as well as the others, but Fidelity doesn't, and neither does E-Trade or any of the others. And if you throw it on a thumb drive and put it in a safe deposit box, that's the end of it. Like, it doesn't. They're not able to make money off of your money. So I also see that value in it too. It would save people billions of dollars. And then the interesting thing is when Michael Saylor talks about it, forgive me for rambling about Bitcoin, as it's been running, it's one of those things that's been on my mind. But when he talks about it in a realm that like I can't even understand because I've never managed even close to the type of money he's talking about. And he talks about you have limited investments you're able to make, and using the real estate in New York is his example as he went through some other things, saying that like it's one of the safest and best things if you want to put, $500 million into it to buy a building in New York. He's like, but now I can take $500 million, put it on a thumb drive, and if I want to go to Asia or if I want to go to Europe or wherever I go, it's with me all the time. I don't know property taxes. The building isn't going to get older. It's not going to need repairs. If I rent it out, I'm not going to need to deal with the renters. And to point to the value of it really being a store of wealth or as they call it, or your value, that he's able to move that type of money onto a thumb drive and go wherever he wants with it without having to worry about taxes. And if he needs to buy something that's $10 million, it's just pressing a couple buttons. So I get that value end of it too. Um, Now Rudolph is asking, did you manage to move that non-paying? Oh yes, yes. So for those of you who don't know, I had a tenant who stopped paying, who I had to go through an eviction. Unfortunately, here in Las Vegas, they're very landlord friendly. I thank God that I don't own property in California or New York or some of the ones where I've heard these horror stories. While you lose time and you lose your rent, the process is pretty simple, and there are a few companies that do it. So you can just Google search, companies that do evictions. But they charged me like $80 to do the first paperwork, which is filing whatever they file. They then do what's called a 7-day pay or quit. So they put a notice on the tenant's door. They have 7 days to either make the payments and get caught up, or it then goes to the next stage of the eviction process. If they make their payments, that's the end of it. You have to let it go and move on, which from my end, like I said, as a landlord, you want to have good tenants. You don't really want to evict anybody. I think it's similar with employees. It's not like you want to fire employees, but if they don't show up or if they're doing a bad job at the job, you have to make a decision on that. Well, the tenant wasn't paying, so what's my option? Um, so she didn't pay during that 7-day period. It then goes to a 30-day period where basically, if nothing happens from there, they'll evict them. And after the eviction, they'll even send out the constable to change the locks and everything else. The timelines and the costs are, I think I paid another 180 or $220 for the lawyer to represent me when they went to the hearing at the courthouse, simply because she responded and had some answers. And if the tenant actually gives any response, then it goes to court during the 30-day period or sometime in that time frame. In Nevada, when they get to court, if they're not making the payments, the judge is not very friendly to the tenant. So no matter what they've said in that section, no matter how uncomfortable it is, goes to court. I paid their lawyer to go. I planned on going with them just to see the process, but I had something come up that day. And essentially, they gave her another week to either make the payments or then we would be allowed to hire the constable. So 7 days, then 30, another seven plus that those were business days. So really another 10 or 12 days, which she took the full amount. But we're talking about a 45-day process until she had to be out, or we would hire the constable who would come and change locks. And from what I understood, that took about a week to 2 weeks as well. So the whole process, worst case scenario, takes about 2 months. Fortunately, she didn't do any damage to the house. She did some damage to the backyard. A little annoyed about it. I'm a little annoyed about the money that we didn't drive in revenue, which is why as I've gotten older, I would like, for me personally, I would so much rather own dividend paying stocks than have rental properties. But to be fair, my wife really likes the rental properties, and we bought it when we were first getting met. Like, there's a lot of things there, and we got in 08 or '09 when the collapse was having, so we got in really well and refinanced when rates were really low. I would so much rather have a dividend check coming in than dealing with tenants, than dealing with um, when an air conditioner eventually breaks. I don't really want to get the home warranties because fighting with them is a nightmare. Like I would just rather get a dividend check. I've never had one of the companies call me and tell me that they're having trouble with their air conditioner. Or I've had tenants call me, tell me they need a light bulb changed. And it's like, seriously? You can't change your own light bulb? Um, so Mac the hurdler is asking, do I know a lot about credit? And depend meaning like credit reports and credit scores. Sure, I know a decent amount about it. If you have any questions, I do mortgages. Um, I'm not trying to do any mortgage business. I like this stuff better. The funny thing is even with mortgages, I watch the bond market, but I really watch the stocks more than like I keep an eye on the 10 year and mortgage-backed securities. And yes, I've learned a ton about credit and improving it over the years doing what I do. Um, but it is what it is. And if you have questions, I'm happy to answer any of it. The basics are pay your bills and don't fall behind and be good for your word, the same as I would with anything. Um, so Rudolph is asking, what was the order of investments for you? You bought stocks from your inheritance first, and what was after that? Job, pizza place. So it wasn't really an inheritance, and it, but yes, the funny thing is it was something that my family always talked about, so I always wanted to invest in general. Um, when I was in high school, I'm guessing just from when I think about the timeline, and I know Rudolph must remember it. I told the story a bunch of times. But my grandfather probably found out he got cancer, but it must have been pretty early on because he lived for a while after, and he gave all of his grandkids $10,000. My mom, there are five kids in our family, and she took it away from all of us. And I kind of argued, and she asked me what it was for. I'm sure she thought I wanted to buy a motorcycle because I was getting my motorcycle license at the same time. But I wanted to put it in the stock market. As much as she was thrown off, like I remember them talking about real estate, stock markets, and stuff when I was a kid. And my own personal, like, what I think about a lot, my laziness and everything else, all I thought was, whoa, that's amazing. So if you have some money, you can put it in things to make money with. And I saw that as an opportunity for what I would want to do if possible, because then I could do whatever I wanted. It was sheer laziness of like, my God, if I could put money in these things and the things would then go up in value, I could live off of the things that go up in value and be able to pay my bills. From there, I worked a zillion jobs, even when I was in high school. I worked at the local supermarket. I worked at a deli in the downtown where I grew up in. I worked at a t-shirt store for a long time where I would not just work in the store, but I don't want to call myself a manager. That was a way overstatement. I think the owner kind of told me to tell people that because it gave some clout. But I would then sell uh, jerseys and uniforms to teams I was on. I would try to sell it to the high school, and I would start making money working at the t-shirt store, also selling t-shirts outside of the store. And as a kid, back then, man, if I made $20 on a Sunday, that was enough to like go to a movie and have dinner at the diner if I took a girl out or something. So it was really just cool to be able to make my own money. But I put away every penny I could. I remember, God, I couldn't have been but like 15, and I was saving up all the cash I was making. I think I was making $5 an hour at all of those places, whether it was the t-shirt store, the deli, or the it was a Grand Union. I don't even know if they exist anymore, but the supermarket where I actually had to lie about that I had my work permit. And anyway, but I was saving all that up, and I built up to like $400 or something that I had hidden in my room, and my mom found it. and had a fit, like, where did all this money come from? And when I said I hadn't made a goal, I wanted to get to either 500 or 1,000 bucks or whatever the number was. That was like huge back then. And similarly, it's just where my head's always been. So I saved cash for a long time, and then I learned about CDs, and then I learned about the stock market probably in high school. But even from like my first jobs, I was constantly saving. When I went to college, I worked some jobs here and there, but mainly in the summers, and I would save at those and I would put them away. And when I got out of school, I didn't know what I wanted to do. But my first job out of school was when my brother called me up, and he's 5 years older than me. He'd worked his typical jobs, but then he was working in Chicago at the Chicago Mercantile Exchange. So my first job was instantly getting into finance. And similarly, I was making minimum wage there, but I'd saved up enough that I could pay for like place to rent and expenses for probably about a year or so without having too much stress about it, just from what I had saved. I wasn't really relying on what I had put away with my grandfather. Even though I did similar, like back then, I asked for the stock certificates when I bought those things and gave them to my parents, who put them in a safe deposit box. So it wasn't like it was at my disposal, even though I knew it was mine. Um, and I was really just relying on what I had in my savings account, what I was making at work, and trying to to move up at work to have to pay the bills. Um, but the fact that I was just in that industry, all you think about is saving and putting away. When I transitioned from just a runner that was getting minimum wage to working for one of the banks, yes, I did their 401k. I put as much as I could into whether it was stocks or back then mutual funds, not ETFs, um, and things of that nature. And then I was really fortunate to get an opportunity to become a trader after about a year working down there, which is just absurdly fast. Um, my brother, really similar personality. We were saving up money to try to get one of us, essentially him, to become a trader. And if he had success, then we were going to use the money from that to let me start trading as well. When he was going through the classes to get licensed as a trader, he got an opportunity from a company down there where they would put up the money and he could trade for them. So I get a phone call from him, and now I expect my timeline to be another 2 years out. And he's kind of like, "So you ready to start trading?" And I'm like, um, "What are you talking about?" As he proceeds to tell me, I got the offer from this company where they'll put up the money. We end up splitting it 50-50, but it creates an opportunity where I can take, bigger trades and whatever else and use their money to trade. And the money that we had saved that I was going to use, you can now use and you can go start trading. So I was just floored. And then from there, beyond fortunate that from day one, I just start like, it's like playing a game. It's not, I don't know how to explain. And even when I went to, like, they have these silly trading classes that are make believe, but it's kind of silly because make believe is totally different. Um, they say think about it as bottle caps. Don't really try to think about it as, I traded yen futures, but don't think about it as buying or selling the yen, because it may become overwhelming and you may start thinking about the money. Talk in terms of ticks or points. Don't talk in terms of dollars, and don't think, and they're right. If you just go in and bid and offer and don't think about the money, because if you start to think about the money, it's overwhelming and it becomes very hard to trade. It's kind of funny, when I left the floor and started trying to trade on the computer, one of the toughest things for me is that they show your profit and losses in dollars. Like, they put it on the screen if you're up. It was all handwritten, and I had no idea if I was up money or down money. I just, like, I did, but you didn't pay such close attention like that. I think that really helped me to trade, especially because you do some of the dumbest things on the floor. Like, you do all the things they tell you not to do. You probably dollar cost average in the losers and make them bigger and bigger and hope that the market reverses. And you probably don't really add on to winners. You're probably just too happy to take the profits and move on to the next. And what they teach you is, add on to your winners and don't add on to your losers because you'll make them worse and worse. I can't tell you how many times that the market was going against me and I was just putting on a bigger and bigger trade like an idiot and nervous and sweating and knowing that it was bad, but having no idea how bad it was in hopes the market would reverse, which most of the time it did. And I'm really fortunate I did it when I was 23 years old because there's no way I would take that kind of risk at the age I'm at. So long answer, Rudolph. I apologize for rambling, but I don't know that there was really any order other than my mindset was constantly about saving. And I talk about it all the time in the videos. What I really hope for the channel is that somebody or a few somebodies see the value of saving money who probably didn't think about it prior. I don't mean to be all sappy, but that's really my goal. That's what I hate about the doom and gloomers. And I get that they get tons of clicks, and I get that some of their channels do really well. But I just think it encourages not saving because all they talk about is how bad the economy is and how some big crash is coming. Let's say they're right. Like maybe they are. Um, I, I don't care if they're right. I would rather see somebody put money away consistently on a weekly basis, not worrying about if some crash is coming to the next week or next year or in 10 years, because getting in the habit of saving is the habit of saving. And getting somebody, super scared that the big collapse is coming, so I'm just going to wait until the collapse is coming and then I'll buy it. Like if you look at the timelines of when the market collapsed, yeah, good luck to you. Things were really scary. It was the Great Depression. Nobody had any money. It was the banking crisis and the internet bubble where markets really crashed, or the 1987 crash. It's not like things look hunky dory and everything's going well and oh, just randomly the stock market goes down. So if you think you can point to those timelines and think, you know, housing's collapsing, the banks are all going out of business, the government doesn't know how to handle it, I'm just going to put some money in the stock market. Well, good for you. Versus ignoring the gloom and doom and not trying to time when that collapse is coming and simply just getting in the habit of saving when you can and putting away. You know, my wife and I went to do mortgages years ago when the bubble happened back then. And I remember the guy talking about how things just go higher. At the timeline when things were just going higher, everybody thought that real estate would just go up forever. And then when it collapses, they all think, oh, it's going to go that way forever. Uh, he was teaching about the option arm, which it's a great program that they've gotten rid of because it got abused. And I think it's part of what caused that big crash, not house prices going up too much. And I've talked about that in other videos if anybody's interested. But telling somebody take the smaller payment because you'll save money and you can just put that away in things was the sales pitch. But people have a tendency when they have extra money to buy stuff with it. They don't have a tendency to save for the most part. So if you tell them instead of spending $3,000 a month on your mortgage, you'll be able to spend 800. They think I have $2,000 that I can go to dinners, I can buy a car, I can buy this stupid boat, like whatever it is that they feel like they're saving the money and they can just spend it on what they want. They tend not to save it for when something changes and they need it. It's the same thing with the videos. Like, I want to encourage people to get in the habit of saving to be repetitive. And the reason I get so annoyed about those doom and gloomers and when I see the comments about the government sucks, my boss sucks, nobody makes enough money, inflation's terrible, what I think that's doing is encouraging them not to save. They're able to blame it on everybody else and put themselves in a worse and worse position, and then get upset that Social Security isn't enough for them to survive on. Just so that we're all on the same page, it is not enough to survive on, especially with inflation and everything else. So I always figured I wanted to be in the position where I didn't want to stress about all that stuff. So all I do is think about saving. And I drive my wife nuts because all I do is talk about finance because I like this stuff. But that's really why I do the channel. And then it helps me be more disciplined too. When I make a comment on the channel, it kind of forces me to stick with it. Like the way I've set up for 2025, I know myself well enough that I'll trade in and out of these stocks. Well, I sat myself down and recognized, I really believe in the ones I'm picking. Stop selling covered calls, stop making changes. If I say something to you guys on the YouTube video, makes it a lot harder for me to veer off path. It'll really force me to kind of try to stick with it. And one of my buddies, I talk with him about this stuff all the time. I looked at my account after I'd set it up and kind of laughed. I go, oh, geez, now I'm super bored. I don't know what to do. And he's like, what are you talking about? I go, because I've bought these 4 companies, I'm committing to them, and I don't need to get in and out of them. And he started chuckling. He's like, "Well, you're gonna have to figure something out." It's like, "No, I think I'm okay. My goal is to do well." Zev Zevka, I'm glad you found the channel as well. You know me in real life? Huh. You're the guy that beat up Mike Hawk. I don't know who Mike Hawk is. I tend not to get in fights. The only I tend to talk my way out of them because I think it's so. One of the guys who used to train next to me, he was I don't want to say professional boxer, but my understanding is he was a amateur boxer. And every time I would say I'm too big, he would go, I'm 3 on 1. Like he would just cut my market every time, and he was driving me nuts. And I said something to him, and he says something back, and I say something back, and he says something to me. And whatever I say next, he says, do you want to step outside? Now, I knew he was a professional boxer, and I essentially said to him, I'm like, Jimmy, I don't mean this the wrong way, but if you want to go outside and kick the the crap out of me, for wasn't quite the word I used, like by all means we can go outside and you can knock me down and beat me up, but I know you're going to crush me. I'm not really sure what that fixes here. And I was really nervous saying it because I was worried he would say, let's go. And he kind of looked at me confused, and that was the end of it. And we actually became kind of friendly afterwards. But I also kind of meant it. Like, I, I'm not a fighter. I don't think I beat up Mike Hawk. I'm not sure who Mike Hawk is. Um, but if Mike ever came to get in a fight with me, I'm guessing I would say something to kind of temper the situation. Just not my personality. But I'm glad I remind you of somebody. Does anybody want me to look at any of the stocks they're looking at? I mean, I'm happy to go into the ones that I think are really cheap right now. I think Google's a super steal. Um, I think with what's going on in the Department of Justice, maybe it takes some time, but they're the least expensive of the Magnificent Seven, and they generate so much money and they do so well that I think when this passes, the company will just be free to be valued more appropriately. And right now, the funds are nervous about what the Department of Justice is going to do. The interesting thing is, unless Trump puts people in charge who want to go after them as well, I'm guessing when there's a change in administration, the lawsuit may change as well. Especially when I look at it, it's like, I think it's way overreaching. I mean, it doesn't mean they can't do it. If somebody in the government has a bug up their butt for Google and just decides they want to punish them, I'm guessing they will. Um, would make me worry if I'm one of the other companies, which I heard that Mark Zuckerberg went out and met with Donald Trump at Mar-a-Lago, and I'm guessing it's all of this stuff to make sure he's in his good graces and not gets the guy annoyed. I know he and Elon Musk have had their history. They talked about that silly boxing match a while back that I'm guessing that there was no truth to that. But I'm guessing that these guys do want to buddy up to him just to make sure that they're not in the negative. So either way, I think that makes Google really attractive here. I know you guys have heard me a thousand times talking about Boeing. I really think now that the strike is over, the crash has happened, but they're not still going on. Um, New CEO, all of that negative stuff that was overhanging on the company. Well, all of it should be in the past at this point, unless they have new issues that come up. So I'm guessing over the next few quarters, they can start focusing on the revenue and the earnings and what position they are financially and what position they see them going to be in the future. So I feel like Boeing got so overly, like the news was so negative. I can't imagine anybody was out there buying it other than whatever funds were valuing it where they were, and maybe a couple buddies and I that were saying the same thing. And the pain's been terrible. Um, I was selling covered calls against it, so I was making up a lot of the losses each week. But I couldn't imagine much more negative being on a company than what was going on with them. Um, think some of the energies, and I try to stick with what's in front of your face. Like I like Exxon and Chevron. I think they're. I try to stick with the ones I think are the best, and just trust that if they are, that things will work themselves out over time. Um, I don't see a whole. I guess Target had some negative news, which makes me think it's probably pretty attractive right now as well. They're at a huge discount from what the Walmarts and Amazons are. To be fair, they missed those earnings pretty badly. It was pretty ugly. But if the reason is what the CEO said, which was a majority of it was when the port strikes were going on, they actually rerouted a lot of things that they were getting from the East Coast to the West Coast ports, and they ended up being overstocked. And I'm guessing that was in preparation of being scared that they weren't going to be able to get items. If that's really what was going on, and the only reason the earnings were so terrible because then it was a little bit slow, but they had higher costs of holding all the things that they bought from the West Coast. Well, that'll work itself out, and they have the holiday season now to try to get rid of it. It's funny when I look at these Black Friday sales, and they don't really look like a whole lot. I- I'm cheap. I'll wait until January, see if they got stuck with a bunch of stuff, and then I'll go to pick up whatever sales there are in January. Now, of course, I'll buy whatever we need to get for our son to have Christmas. And if my wife wanted anything, same thing. Um, but I don't know. I don't see these sales as being anything major, and I think Target will work through those issues too, and earnings will be better. And even where the earnings were, their forward PE is like super cheap, and they pay a nice dividend. That they're making plenty of money to be able to pay that dividend. So I I guess Target looks pretty cheap to me too. Let me take a look about Oxy. Oh, I know. Who was it? Was it Ryan? Was it you earlier who was, or Rudolph who was asking about 10Xs? The other 10X that I've put on right now in terms of my hope is OKLO. And, Liberty Energy might be another one of those too. Again, not financial advice. But the person who's been nominated for the Department of Energy is on the board of both those companies. And I want to say he's like one of the officers for Liberty, and he's a big investor of OKLO. Well, when I think back to when Dick Cheney was vice president and how well Schlumberger did, my guess is these companies have some real upside potential. Whatever laws come forward and get going as we start moving into nuclear investment, um, I think they'll have some favorable things fall their way. And my guess is that those stocks do very well because of that. Um, when I look at their financials, they don't look great, so it is a real shot in the dark. But I'm trusting myself that having that guy be in charge of the Department of Energy is probably a good thing for those companies. So over the next 4 years or so, I figure it's a decent shot to potentially get lucky and 10x on something. Let me take a look at Oxy and see what I think. So David is saying thoughts on Oxy. Buffett favors it, but does he know something we don't, or does the company's analytics match his discipline? I, I would say the company's fundamentals always match his discipline. Buffett's really good about buying things on sale and trusting if he thinks it's a good company and sticking with it. First initial look, um, yeah. Oh, I forgot it was Occidental Petroleum. Um, maybe so they were selling off already. This is not because of the election and the potential for drill baby drill and more oil, so lower prices and things of that nature. Looks like the high of the year they were up to 71 and they're trading about $50 a share, so which is just off the low of 48.50. And they had I'll have to look. Give me a minute to read some of the news and see some things going on because yes, it looks like very inexpensive compared to where it should be. It's trading at just under a 14 PE current, so it's not even forward PE. So if it's growing, it's super cheap. They're paying a small dividend, but they make a ton. They're making $3.83 a share, trading at $50. If that, let me see. Yeah, I mean, to me, this looks like a great company if I were looking to get into that space. Good earnings, plenty of money to cover the dividend, which is super small compared to what they make. They're paying currently a 22-cent dividend, making 383 a year. So call it 88 cents a year off of 383. They still have $3 of investment or paying down debt or whatever it is that they need to. All the analysts are bullish on it too. I think it's just fallen off and it's a bit discounted. Let me look at a longer chart too. Yeah, let's see what was going on. When the market was correction, it was probably going up, and it's probably a good defensive play too because if the economy slows, these are the type of things that kind of catch themselves. But I think Oxy looks like a great value here. So I would agree with Buffett. Um, and I haven't thought to I know he's raised a lot of cash and sold out of a lot of things, but he bought them really cheap, especially Apple. It's now, in my opinion, not so cheap anymore either. I think he's probably early because the market still feels like it's going higher to me. But I was listening to somebody say, he's pretty limited in what he can invest in anyway because of the size of the investment. He can't look at small caps or things like if you're putting that kind of money into something, you'll move the market too much. Yeah. Um, I like Oxy. It's funny now that you put it in front of me. Yes, his discipline always matches. I have a bunch of theories as to raising the cash. I think even as he's getting, I think he sees the markets getting frothy. But I also think that he was concerned that if Kamala won, that she might raise the capital gains taxes. So it was a bit of hedge against that because he could lock them in where they are currently. And then on top of it, as he gets older, I think it was also a way of freeing up cash for when he retires or whatever goes on in his life, that the people who end up running the fund would have cash to decide what they wanted to do with it instead of feeling like they had to sell positions that may get second guessed on. I'm guessing some of all of that came into play. Um, and I'm guessing now that he's cash heavy that, yeah, it's hard to invest in some things because there aren't any real steals. I would say Target and Boeing, but if he doesn't like those companies, those are out of his realm. Uh, Rudolph is asking, do I think that Berkshire will start paying dividends after his error? Um, I'm not in those meetings, so I don't really, but it's hard to imagine that he won't. I, I would think so, but I guess who knows? It's kind of funny that he says he doesn't believe in dividends, but a lot of the stocks that they own pay dividends. So maybe that changes over time. I think that's just a way for them to have as much as possible to be able to invest. But I hate to admit that I like dividends. I wish I didn't, because I think that the better companies are the ones still growing, and when by the time they're paying a dividend is probably when they don't see the path for growth. So, other than slow growth keeping up with inflation, but I hate to admit I'm super attracted to them, especially as I get older, because like I said when we began the video or earlier on, my goal is to be in the position that the dividends or whatever comes in is able to pay the bills, so that I can slowly transition out of things that have risk into things like, I don't know, Procter and Gamble or Johnson and Johnson, that are pretty stable companies and probably able to pay those dividends for a long time forward. If I were in the position that I could sell what I have and own, a 20 stock portfolio of 2 or 3% yields that actually could cover the bills, but my bills are too high too. So, but I have wife, son, college to think about, all those things, and maybe I just worry about it too much. Well, David, of course, I'm happy to do it. Like, I like the time. I look forward to the Sunday live thing that I've been doing. Sorry I missed it last week. I actually planned to do it, but it just got thrown off. We were visiting with family, and was didn't work into the timeline too well. And then on top of it, as dumb as it sounds, I felt kind of silly in their backyard talking when my wife's aunt and uncle might show up and be walking around the backyard, who often ask opinions as well. Anyway, does anybody else have any stock you want me to look at that you've been eyeing, that you're curious what I think about it? Um, if not, I'm gonna call it a day. Um, no, I don't follow it, but it's easy enough for me to look at it. I really do limit what I look at to the stock, to the name brand stocks that I know I might invest in. Let's see, Arbor Realty Trust, it's a REIT. Fees low, earnings are good, look decent. Well, their dividend payout looks like more than what they have coming in earnings, so that would be a concern. But I don't know enough about them to talk intelligently about it either. Um, but yeah, I mean, I figure Vici and some of the others are probably pretty good. O is a friggin' monster, but you're not really gonna make like, don't you'll get dividends. I don't want to say you're not going to make money, but that's kind of my point. Like, I still stick with growth for my account, even though at some point I should be transitioning to things like O or whatever. I'd have to dig a little deeper into Arbor, but I mean, I like the idea of REITs, and similar to what like, I hate owning the properties myself. I'd way rather get a return, and I would be cautious of anything paying 11% return. Dividends are not really free money. They really need to generate enough revenue to be able to make those payments, and a lot of the ones that do, they end up having to cut them over time. So it just depends on what their financial stability is, and if they're really able to do it. I think when you get to the 5 or 6%, and don't get me wrong, I mean, I have mine that does what preferred stock. I do this one, Virtus Capital. The ticker's PFFA. Same thing. I mean, it's got a super high dividend. It's probably taking on more risk than I recognize. If I were to guess, they're leveraged to be able to get that type of return, even in preferred stock. Um, but for whatever reason, I still stick to it, and I'm happy to get those dividends. But I'm probably better served in something that is in a better position to legitimately pay that much. Does anyone, I don't want to say guaranteeing, but paying 10% or more is taking on some risk. Um, it's just that simple. Anyway, guys, thanks again. Oh, let's see. All right. So, Sarah, I'm glad. Thank you. Great fan. Glad to hear that. That's cool. How about FICO, which is a great company, Broadcom, which is an awesome company. Oracle is one of my favorites that I kicked myself because I had it in my safe deposit account and I got out of, or IRM. I think that I'm not, let me look at what IRM is. But the others I think are great companies that I really like. Iron Mountain, let me see, who are they? Oh, so they're in real estate as well. So it's New York real estate primarily. I think New York's a good place to be invested. Um, they look okay to me. Sorry, I'm just looking at the information. Um, FICO is a great one. Doing mortgages, I like the end user ends up paying a ton. So one of the guys, Joseph Carlson, who I really like, talks about them raising the price a little bit shouldn't even impact the market. I don't know what they charge the middle person who then sells it to the end users. And I'm guessing the big banks, they're negotiating with them directly. But I got to tell you, those fees went up a ton the past few years, and it has gotten to the point that it's like they're expensive from our end. I mean, not the stock price, but I totally think that they do have a moat that it's going to be very hard for somebody to come in and compete with them. And I think that they can continue to grow over a long time. So I see them as a really great company. I love Broadcom because I feel like they get overlooked a lot of times from some of the others. Um, Let me take a look at something real quick. Um, I'm doing great. Thank you for asking. Um, I think Broadcom gets overlooked a bit. So this will sound silly. I liked it better before the stock split. Um, I like when stocks are expensive is the wrong word because to me, expensive is price to earnings, not the dollar amount of buying or selling a stock. But I really like when stocks are trading over $1,000 a share because I think it chases out a lot of the general public. And I'd rather be buying from the institutions that are just valuing it properly than the emotions of the typical investor that pushes prices too high or too low intraday. So I think they're a great company. I think they're overlooked because Nvidia gets all the attention. Um, I think it's a great space to be in and a really good company. I just like I like things when they're trading higher valuations just for those reasons. Um, you see. All right, guys. Anyway, I'm gonna go boogie. I think we're actually probably going to yoga class in a bit, so I need to go get ready for that. But thanks for showing up, and I'm sure I'll talk to you guys next week. Have a good day.